let's get into your pro picks. These are pro picks coming from Justus Parmar, Fortuna Investments, and this segment is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, Justus, you talked a lot about Elon Musk, so is it any surprise that your first pick is Tesla? And I think the timing is really interesting because obviously Tesla really ran after the U.S. election. Now it's come down. It's actually down in 2025. Why would you add to Tesla here?
I mean, look, I think Tesla, it's a super company. It's a generational company. We at Fortuna, we don't invest for the long term or short term. We invest for the long term. So I guess the commentary on Tesla is a couple things. One, Elon gets a lot of noise. I think he attracts a lot of noise. It's always what's going on. And that actually reflects into the stock too. Is the stock up? I mean, it's kind of a meme stock sometimes. It's doing a lot of different things at once. And so I just want to, I guess, preface it with this is a long-term perspective. It's a bit of a contrarian perspective in the sense that I have no idea if it's going from 300 to 400 before it goes to 250 to 600 or 700, right? So what the crystal ball does tell me, or the tea leaves say, is that it's a very, very well-run company. I know there's a lot of dissident shareholders saying, well, he's not really running the company, he's running three others, and he's stuck in the administration, and all sorts of crazy things are happening. I'd put that all to the side. The company's very well run. I think they had a little bit of a disappointing quarter where their sales weren't necessarily where they should be. There's a Chinese company, BYD, that's doing exceptionally well. I mean, so there's a lot of things at play here. But when you look at the long-term viability of the company, here's a couple facts that are undisputable, in my opinion. And so they're going to have FSD, self-driving cars. They're going to start charging for self-driving cars in Austin, Texas in June of this year. He's got 5 million cars on the road, right? He's going to start charging $100 a car. Obviously, not every single person is going to take it on, but you start to see some of the things that are in the background that aren't really visible over the next couple of years, right? And so when you look at Tesla comparatively to any other car company or even company out there, they're not doing anything that, like, he's wanting a billion. Like this Tesla is a generational company, and they've got such a moat around their business. And the self-driving cars, when fully implemented, it's going to be a game changer. It's going to be a re-rating for the stock. The revenue profile is going to change. The dynamic of the company is going to change, which is going to happen in the midterm, let's say. In the longer term behind that, you've got the Optimus robots. We're very keen on AI and robotics. And so you might have seen quite recently, he did a little snap show in Hollywood, California, where they're kind of functioning, kind of not. So they're not perfected. I think it's going to take a year or maybe two to get perfected. But the goal is to have 8 billion robots out there taking out our garbage, doing different things, assembly lines, at the price of a car, $30,000 a year. You can probably amortize it over 5 or 7, just like buying a car. And that's the goal. And so this is not a guy that you bet against. He's pretty much been able to achieve all the things that he's been trying to do within the company. And so when you have a company like that, and it's a $350 stock or a $1 trillion company, you add those two elements in there, I cannot see a world where that's not a $3, $5, $10 trillion company over the long term. And for those reasons is why I and Fortuna are so bullish.
All right. That hits back at a lot of bearish thoughts, and it sounds like you're less concerned about the auto sales now and more looking about what they could be if they're able to hit their deadlines or move towards what they're trying to do with fully self-driving and eventually robots, which feels like such a wild statement to say. But that's why you're looking forward. Okay, your second pick is uranium energy. And this one has pulled back actually quite sharply in 2025. People are very excited generally about uranium because you need it to fuel nuclear, and you need nuclear to fuel all the AI investments. So that's why we should be excited about it. But then the stock has pulled back.
Yeah, so it's a super interesting setup, and that's actually partially why I like it. Some of the reasons that you alluded to. Of course, like AI gets a lot of the buzzwords. It gets a lot of attention, and it's not that it's not unwarranted, because again, they're going to need clean power running 24/7, running these data centers. But I don't necessarily think in the foreseeable future it's going to be that uranium demand that's going to be able to meet the AI. Over the next 10 years, absolutely. But in the interim, it's going to be LNG and maybe even coal and different things like that are really going to meet that need. But what the one thing that we do know with certainty within the uranium and nuclear business is that there's over 100 reactors going online in China. There's almost 100 reactors going online in India. Anytime, and this is the first time this stuff has happened in almost decades. And so what we're going to see is when a reactor goes online, that's going to sit there for 60, 70, 80 years. It's going to need a lot of uranium on the front end, but you're going to need that uranium over 60, 70, 80 years. And so when you go on the nuances of the setup, the uranium setup, there's a supply demand shortage within there based upon the reactors going online. So the AI stuff is all, I don't want to say gravy, but that's just icing on top. And so it's a really interesting setup. Obviously, if you believe in AI or reactors, I think it's, and again, I wouldn't be speaking like this if it was the previous administration or what's been happening in the EU and things like this, where in the EU, we took energy policy from a 14-year-old girl for some reason. I have no idea why. And it's worked out very poorly for a lot of the folks in a lot of countries there. We're in totally different life. We're in a totally different administration. And so you really need to be hip and turn to understand what's going on. And again, we've got an American government that's so pro-tech, so pro-nuclear. President Trump was on the Joe Rogan podcast earlier promoting nuclear and uranium. He's very, Elon as well. He flew to Fukushima after Fukushima disaster. He started eating carrots from the ground and drinking the water. This is 10 years ago, mind you. And so you look at all the folks around the administration, they're pro-tech, they're pro-nuclear. Chris Wright, who's the new energy secretary here, he had to resign his post at Oklo, which is Sam Altman's nuclear company. These are, whatever way you cut it, they're so pro-nuclear, so pro-uranium. The last point is again, we're very heavily biased towards American companies. In America here, we only produce 2 million pounds of uranium. We need 50 million pounds of uranium. It's a crazy setup. Amir's company, UEC, is going to have 2 mines going online this year in America. They're going to have a third mine going on next year. Unlike other uranium companies, it's unhedged, meaning that they haven't forward sold their production. So I think, look, if you believe in America, you believe in uranium, you believe in Amir and his executional capabilities, and you want the stock at a 40% discount, I think there's a lot to be very excited about in uranium energy.
And I guess the fact that you're picking an American one speaks to kind of your preference to remain in America, because of course we've got Cameco here, which is doing a lot more in terms of production volume. Your third one, and you alluded to this, is Rocket Lab. That was a big winner for you. It has come down a little bit. I'm sure you're still sitting on a really nice gain. What is Rocket Lab? Why do you feel comfortable adding here, or why would you? Because as I mentioned, even though it's pulled back like year over year, it's still up huge.
Yeah, so I don't want to be chastising buy this thing here because again, it's up 800%. I don't, and in good conscience in a certain way, I wouldn't say bet the farm on the thing, but what I will say is this: it's got a great profile. It does $100 million of revenue a quarter. It's not just the launch business, so they've successfully launched 60 rockets. So Elon Musk's 80% of the market here, but you can't buy the stock because it's private. So it's a good public way. That's a company of Peter Beck, who I've got to know. He's a great CEO, great executor. He's been doing a lot of stuff in the launch business, but ironically, he's actually acquired a handful of companies over the years that are all space adjacent. So they're in the space supply chain. You cannot not work with Rocket Labs. He's almost immersed himself in the ecosystem. So it's not just the launch business. He's got a big market cap now, $8, $9, $10 billion on any given week or fluctuation. I like the fact that it's got billions of dollars of customer backlog. So it's got a healthy, order book behind it. What I don't necessarily love at this current moment, it's not a profitable company, right? And it ran so hard and so high. Even higher than we kind of maybe expected in the velocity that it moved. I might wait for a financing or for something like that. I think they have $300 or $400 million of cash on their balance sheet. They burn cash. There might be an opportunity in and around a financing in maybe the not too distant future where maybe that would be a better entry point. But again, if you're looking for a really swing for the fences type of opportunity that might be able to gain government contracts and continue to execute, that for a public company, that's the only way. That's the only company in the world, in my opinion, to play the sector.
All right. Super fascinating. I really learned a lot in this last hour. Thank you so much to Justus Parmar of Fortuna Investments for joining us. Thanks, Justus.